Hey, good morning, everybody. Good afternoon, depending on where you are. Today is the 29th of September, 2024. I'm super excited. We only have 1 day and 6 hours until that quarterly candle closes out in the market. And it feels like yesterday that I was in southern Florida, and I was speaking at the Money Show last October, 2024. And I remember specifically sitting at a round table and speaking to a lot of our traders and members saying, "Hey, I'm looking for price to move into this demand zone and I am looking to buy the dip." I didn't think that we would be here 4 quarters later saying, "Hey, we made, higher highs." And since last October, it's just been extremely bullish. Now, I did go to Vegas earlier this year and spoke at the Money Show, and we talked about, or I talked about how I was extremely bullish in a lot of the names that are continuing to look great this year. But, I made a remark. I remember this sitting on a panel saying that we could see ourselves at higher highs each consecutive quarter this year, and it's really played out. So I wouldn't say that I'm surprised because price really shows us the way. Price is king. And it's done everything that honestly what we projected back in January with you folks. So very, very exciting as we get closer into the end of the year. I can't believe that we only have a couple months until we finish the year. I'm just fortunate to be here with you guys and saying that, we had a hurricane come through. It just missed us here in central part of Florida. I say central, sorry, the panhandle. But supposedly there's something else out there that could be headed this way as we speak, like 5 to 6 days from now. So, knock on some wood, say a couple prayers out there for us and make sure everything's good to go because I know there was a lot of disturbance out there from this hurricane, not just in Florida, but especially in the place that I just visited in Asheville, North Carolina. So, again, to anyone out there that's has been impacted, my prayers are with you, and I hope you're doing well. Let's go ahead and start here with this week. Speaking about this week's major U.S. economic reports and Fed speakers. Again, guys, this is just a catalyst. All of these are catalysts that create volatility in the market that pushes price to supply and demand. The advantage of supply and demand methodology is that we are able to identify these levels before price gets there, and what I focus on, what Melissa focuses on in the Trendy Room, is teaching you how to execute at these levels. So the cool thing is, we already know where they are. We just wait for these catalysts to push price there. So, first thing I noticed coming into this week's economic reports is that once again, we have a lot of Fed heads speaking. That tells me right away that it feels a little choppy, a little volatile. The VIX is starting to bid up. And yeah, we could see some volatility coming into this week. So Monday we have again Fed head, PMI, and then we have Jerome who's speaking at 1:55 p.m. Eastern time, and then on Tuesday PMI, ISM, manufacturing, construction, spending, job openings, Federal Reserve, Lisa Cook speaks, and again that head speaking. Wednesday, ADP employment, and then we have talking heads. And then on Thursday, I feel like it gets a little bit more interesting with initial jobless claims, PMI, ISM services. And then on Friday, U.S. non farm payroll and unemployment rate. So that wraps it up on that end. The next thing that we'll be looking at is this week's earnings reports. And remember, so it's getting really, really slow now, not a lot to get excited about. But I would keep your eye on banks because banks are due up for their earnings very, very soon. And I love to capture. So if you're interested in JPM, BAC, Citi, all those, Goldman Sachs, look for supply and demand zones there. That's probably what I'll focus on some of my videos that I'm going to push out either later tonight or later in the week. That's where my focus will be, just to see how those guys are reacting off of supply and demand. And of course, I'll be looking at my favorite stock that I've held this entire year, which is Tesla, and a few other names out there that I'm definitely interested in. But this week, the only thing that I really am looking forward to seeing is just how Nike is doing. And other than that, I don't really have any skin in the game in any of these other names. So pretty dull. But again, banks are coming right around the corner, so let's keep an eye on them. The next thing I want to be looking at is the quarterly candle. I was just talking about those with you, and I want to show you what that looks like. So every week I come in here and I go over the quarterly because I think that it is, in my opinion, the most important chart because I don't want traders to get too wrapped up in the day to day or the intraday when the big picture just keeps playing out over and over. And it stinks to think that, in my head, you have traders who come in on the week and they're so focused on these smaller time frames, which listen, I love intraday trading. I love like scalp type trading. It's fun. But at the end of the day, we really want to focus on the trend because I don't want you to have to look back and go, man, I tried to go long several times, got stopped out, and by the end of Friday, we were just right back up. And if I would have just stayed still, things would have worked out. So don't remember, let's, let's focus also on long term charts. And these quarterly charts really, really have helped out. So I talked about in the first part of this video, I talked about the, down south when I spoke at the Money Show. And this is, we go back since October of last year, and you could see that price came right into a demand zone. Um, and pushed up here um, into again 4 quarters here is absolutely insane. And you guys can see here, look at this, absolutely wild. This came also into a demand zone, and then we pushed up from there. We went inside on the quarter, and then boom, 4 quarters up. Here we are. Absolutely insane, if you ask me. So the question is, do we pull back into the last quarter of the year, into elections? Does it get volatile, or do we just continue to push up? Well, again, who cares? Price is king. We'll come in here, we'll do our analysis. I'll give you these amazing levels, and then we'll trade off of them. Okay. So 929, one day, 6 hours before the quarter candle closes. We have gone up for 4 quarters straight. Things are really bullish this election year. All this is obvious. This past week felt really controlled. So levels remain the same for this week as they were last week. So let's look at 922. We were looking at the new long-term support is 534 by 510. Demand is down below at 462. That's that number just in case things get super wild before the end of the year and it feels like, the market's going to crash. This is where I'm interested in getting super long. Our upper targets remain the same at 568 to 580. And you guys can see we've hit a couple of those and we just kind of stalled out. Close support is 562 by 560. And, last, again, that's not important right there, but we only have one day and 6 days. So it looks like we're going to close up 4 quarters. Very nice look here. Higher highs, higher lows. And at some point, I do believe price is going to pull back, but we'll take it a week from week basis. Okay. Next thing I want to show you are the Qs. All right, let's take a look here. Same thing, 4 quarters up. We hit our target quite some time ago, and it worked perfect. We pulled back from there. We had a nice little dip, I guess a little scare into this year, but it was a buying opportunity. Same thing, guys. We have one day, 6 hours left to go before the candle closes. It's been an amazing year. This past week, price moved right through the smaller supply zone and into a weekly supply zone above where it met sellers. And I'll show you that here in a second. As expected, right, price pulled back from that supply zone, but I would expect another attempt towards that supply zone later on in the week. But price needs to stay above 479. So that would be like that immediate support. You can see we closed out right here around 486 this past week. 502 remains the long-term resistance, which was our target earlier in the year that we hit. And 465 by 441 is support. So that's this bull channel of the move itself for this year. Now, let me go ahead and bring the room down so you guys can see that. And let's go over that quick chart that I was showing you on or talking about on the Qs. So we had this chart, and this has been here for quite some time. That's what I mean, guys. We're just using some formations here, and a lot has to do on the methodology and understand how to think through this process and how to align yourself with the bigger money. Supply had been created up in here Price chewed through the smaller supply zone this past week is very exciting. We moved up right into the line that's been there for quite some time. We rejected there, and again, this is what we were expecting. Okay, so where does that leave us going into this week? Like I said, it's just a matter of can we move back up towards those levels before the end of the quarter. All right, but I say one day. I shouldn't say the end of the quarter into next week. All right, and we'll get into some more charts here in a second to show you that. So QQQ, that's all I have really on that. Let's go over here to the dollar. There's absolutely been zero change in the dollar. So if you've been watching this broad market analysis week after week, basically if we come in here, we had some, almost like tweezers. We popped a little bit, but everything remains the same. Resistance is 101.6 by 104 and currently in a demand zone, so we're getting little pops, but it's resistance, this cloud, these Fibonacci's over here, and I'm not really concerned about the dollar unless we get up and over this supply zone, this 618 and this cloud. So I'm not saying that we can't bounce hard and the market pull back, but I'm not concerned into the end of the year unless we start to bid above all of these levels. All right. So that's what I got on the dollar. Next thing I'll be looking at is the 10-year. Same thing, guys. TNX, 10-year Treasury. Not much for me to talk about here either. Yes, there was a little bit of pop, but it's going to be the same notes as last week. Not concerned unless price gets above or the TNX gets above 3.87. All right, let's go ahead and move on. This puts us into the skew. I was concerned when we were at an all-time high on the skew, and there was reason for concern. The market did pull back a little bit, but you know what? Before I move on, let's make sure we hit the like on this video. Please, tag your friends and family and anybody that may be interested in trading. Tell them to come and check us out at simplertrading.com. And I will be happy, and Melissa will be happy to teach them and show them how we trade the Trendy methodology and how to identify supply and demand. All right, so the skew, once we're up here, we want to be cautious. And guess what, guys? We closed out lower, but it's still really high at around 161. So there is reason for caution this week. What I'm looking for is if the market pulls back, you'll see the skew start to pull back. And then I want to get interested in getting long again once the skew gets further down towards this 135 level. Okay. So again, doesn't mean we can't continue to move up. It just looks like the risk to reward is not really there to the upside at the moment. Again, remember, guys, this was an all time high of the skew. So, wouldn't you rather the market pull back a little bit and us get a little bit bigger range going into the end of the quarter? I would. But the question is, do you get FOMO'd into the idea of thinking that the market's just going to keep going? Listen, I can't make this stuff up. This is a very important chart. When we look at this chart, let's just put it on a monthly. When we look at this, no matter what, if you were to put the SPY, the Q behind this chart, anytime that we're reaching in this level here, it is an area to be cautious, and we will see the SPY and QQQ pull back. It's not whether it does, it's just a matter of time, and it usually only takes a couple days to a couple weeks when we're at elevated levels. Now, again, we did get a pullback. We got that opportunity. And, it would be a new era if the skew just continues to push above these type of levels. That would just be a whole different look that I'm not used to and many, many other traders are not used to. So for right now, we're going to take the data that we've always had and say, hey, we're at a high level. There is definitely, the idea of being cautious into this coming week and any kind of pullback. I am still a bull. I want to be buying the dip, but I want to be buying in solid demand zones. And in order for you to understand where those are, keep listening up. Let's move on into the next, which is fear and greed index. It moved a couple ticks to the right, which is greed 68. If this was your Ferrari, can it go faster? Indeed, it can. The market can get extremely greedy. And again, that would happen if the skew starts to move up and buyers were to come back into the market and make some new highs. And listen, we have room for the Qs or the NASDAQ futures to make an all time high. We hit that supply zone last week. We pulled back, and there could be an opportunity for the ES, the Nasdaq, the RTY, um, you know, eh, just the Dow and everything to kind of synergistically come together and see that really nice move in the market. The question is it really this week? I'm not too sure. All right. So fear and greed, 68. It's greedy. We're greedy. So be careful. Basically, what this means is participants are on the call side, and at any time you get the majority of participants on the call side, then you're looking for some sort of rug pull. Okay. Moving on, the next thing that we're going to be looking at is my favorite when it comes to this, and all of it's my favorite, but the ES and the NASDAQ futures. We're going to come down here into Thinkorswim. We're going to start with the weekly. A little bit of changes here. I'm going to go over the levels with you really fast. My immediate support on the ES futures is at 50.70.42 by 56.77. I would expect buyers to show up there. The entire bull channel itself, from looking at this range to here, comes in at around 56.77 by 555. And then our demand zone for this year, the big demand zone, if something ugly happens, is in this big green box. I have some fib extensions up here around 59.19. 59.19 towards, again, 6,000. That's quite some distance. That's another, $20 to $30 in this buy that we could possibly see into year end. And to me, it's crazy to think that, the markets move so much, that 20 to 30 bucks doesn't even sound like a whole lot. It actually doesn't sound like enough when we're talking about another 3 months to go before, the market closes out for the year. Okay, so who knows, man? I feel like we're gonna have a really fun time this year, regardless if we pull back or move to the upside. I think we'll all be ready. All right. Next thing, let's look at the daily. Here's your daily triggers. Don't forget, please, pause this video, put these down, see how they react. My resistance level comes in at this week's trendy edge. I have a short trigger up here. The big thing here is just remember, we don't blindly just say, hey, I'm going long here or we're going short. These are levels. We go to a smaller time frame, and then we look for certain things to pop up that we talk about in the room. Let's go ahead and move on the 4 hour. I left last week's chart on here plus this week's just so you could see the value of it. We came up, hit our Fibonacci extension. We pulled back. We had a couple trendy turn signals. Price did pull back. We made lower highs, but we did close right here at the previous trendy edge and in a little bit of lower time frame demand. So we could see a pop on tonight's open. Let's go into the NASDAQ. And same thing, we're going to come over here to the weekly. And right here, this is what I'm talking about. We came very close to the NASDAQ supply zone on the Qs. We definitely hit it. But NASDAQ got very, very close, pulled back a little bit. Your immediate support is 20,094 by 19,775. Your lower demand zone for this year, 19,158 by 18,531. Just in case something bad happens, this is where I'd be looking to go long. Extremely long for the year. And then this level right here is just a 50, like a midpoint. So I just want to know where it's at, just in case we break through immediate support. I'd probably most likely try my long again right in there. Okay. Next thing are your daily triggers. Once again, take note. You can pause the video and let's move on. This is our smaller time frame. Again, got very close to the supply zone. Pulled back. The Nasdaq, it's been a leader. It's kind of been a laggard as well. It's gone. It's actually it's done a lot of sideways movement this year, but it's also been really, really fun if you know where to buy the dip, and those demand zones really come in handy. So again, price is king. We're getting very close to some support. We could see a bounce on tonight's open. Other than that, things look really, really bullish. And again, we'll see how the quarterly candle closes out just in about a day. All right. Next thing I want to talk about is Bitcoin. We'll talk about Bitcoin really fast. I've been buying crypto, buying Bitcoin, Ethereum, all that kind of fun jazz the last several weeks, and it's been the same thing that I've told you week after week. I am bullish as long as this green zone held. It held very, very well. I added into my crypto and Bitcoin and stuff like that, and then we find ourselves up here in the supply zone again. What you want to see here, all right, is that we can get up and over, and this was our 2024 target, by the way. We hit our target, we pulled back from there, and I had a lot of traders ask, Well, what's your target, John, if we can get over the 24 target? First of all, I need to at least see 2 to 3 weeks above the 24 target, which was 69. And then I do believe that we're moving up towards 86,000 by 103,000, 104,000. Okay. So again, I need to see at least 2 to 3 weeks consecutive closes above the 2024 target for me to get excited about this. Let's go over here to the VIX really quick and we'll end it here. The VIX on a smaller time frame, I think it's the 4 hour. There's reason to be cautious here. You guys can see we broke above the cloud. And, I'm extremely cautious if we start to break above 19. There's a little bit of supply over here. So just understand that this week we are coming into the week with a little bit of volatility. All right. Again, big focus. Can the Nasdaq, can the Qs work its way back up towards supply? Can we hold some major levels? And if we can, I think things look really great for a move higher. But I am extremely cautious, not meaning like, hey, I'm going all out and buying puts or anything like that. It just means for my long-term portfolio, and you guys know I have options that are, anywhere from 200 to 500 days out. And then I have short-term stuff. My focus, if we get a pullback that I wasn't expecting, I'm adding into those long-term trades only at levels. Short-term would be managing. Short-term, let's talk about that. Let's say that we gap up or things are going in our favor. Because the risk is kind of, in my opinion, outweighs the reward right now. If I have longs on and they're short term, I'm looking at trimming, pulling those stops up, taking those off the plate. Um, yeah, that's all I got. So I really appreciate you guys. Thank you so much again. Have a wonderful Sunday. Can't wait to see you guys tomorrow morning and be ready to trade. Have a great one.